3, 2, 1. Welcome to StockMarketPunny.com. Welcome to the S&P 500 daily chart. We're doing a series of tapes for our SMF Pro Trading students because we care about them. And the thing of it is, we care about them so much that they get to make a lot of money trading the S&P index calls and puts. Directional movement down, directional movement up, failure, and another move down. And basically what I am going to say is that on those other tapes, we did these trades. I'm going to draw a horizontal trend line. And I'm going to establish, we already used the weekly and the monthly, so you already know that in the series. What you need to see here is that how trends on the way up make higher highs. This is called a flag to a pullback. You make a high. You drop down. There was nothing that this trend was not up, and you make the highs. And these are, you know, a series of high to a high to a high to another high. Now, in trend management on a daily, we had that big down move when we were short, but I also said that exuberance, overbought weekly markets, this is a daily chart just to show people, is that we made that bounce. But if you take a look right here, and I want all my students right now to write the number down. The high here was 1219.80 on that reversal. I want all the students to write down where the high reversal was, and the high reversal here was 1207.99. I want you to write down the two numbers. We'll do a mathematical formula so that when I said that you would have the bounce with another big reversal. This happened on the day that we were short on 427. It started here, but it really cracked its skull open on 427. Then the next reversal within the pattern was on 430. And that when you're in trend management and overbought markets, you come down, there's the counter trend. And when you are in this counter trend, we're going to see that in the counter trend that this low that was here is broken on Monday or coming down. But let me tell you something. On the daily chart versus the weekly and monthly is you're about to snap well, not about to, but you could see where the MACD peak was at 18.7. Right now, check this out. That was 11.9. When this goes lower, that tells you that the bounce is to be sold short because this is declining. If this is declining, the trend is weak. There's the reversal. You've now got what we call what? A daily what? I'm going to ask my students. Whoops, it's not quite yet. It's headed down. It's not quite a daily yet because I have the chart. I needed to pull the full one up. A sell signal would be like that there. The point of it is when a trend bounces and the daily MACD is declining, you short the 2 crows up or 3 crows up before the next reversal comes in. That's the way it is. And you were taught that all last week and the week before of what it would look like before it happened. Were you not, people? And the thing about it is on a daily, the public's going to look, well, it's below the 10-day, the blue line, the 20-day, and there's the sell-through. Okay? Basically, market tops have 4 stages. One of the stages, the key reversals, you have the counter trend, you have the reversal. It starts here. Stage 2 is that you come up, you reverse, you could even bounce back up to that high. That would be stage 3 of a double top reversal. We will see if we break that low or bounce to another what? Lower high. So basically on the SMF daily chart, we're going to use the SMF Pro Trader bar. Here it is. You're taught, whether it's daily, weekly, monthly, 3-minute, 15, 60, it don't matter. If I'm closing below 1196, half of that down bar, that means if I come down and bounce back into resistance, as long as I'm closing below half of that trend line, the S&P will remain weak within its reversal trend over here. And that I can't close below half of that bar. If I got support on the top side of the bar, then that means the S&P would be strong and it would consolidate and make another higher high. As long as I stay below half of that SMF Pro Trader daily bar, I'm easily could take out this last low right down here, and my target on the S&P to go long would be right around 1162 to 1166 handle to go long. Okay? And that's the daily chart. I then showed the weekly chart. Weekly chart's overbought, 93. Now it's not so overbought. The weekly bar is greater on the down move than the previous week's up move at the top. This is how they start. Okay, a lot of exuberance is in the market. The weekly RSI is about to cross over. So if it crosses over the slow percent DA, that means that the move is weak. The weekly is that we got support down here at the base. And the 10-week moving average, we could bounce at 1166. We would look at going long the S&P off of that 10-week moving average. And that's the weekly one again versus the daily. Once again, I'm still overbought here at resistance right there on the monthly. I done showed you. They're trying to walk this market into a buy signal, just like when the market went straight down in 08, it went into a sell signal, monthly sell signal. Monthly sell signals and buy signals, they only come around every so many years. Last sell signal we had was in 2001. The next sell signal that came, well, it was right about here, 8/1 of 2008. It was 7 years in between the moves. So basically, you've been given a gift: trade management, stockmarketpending.com school, how to trade long, how to trade short the S&P using index options, and all various chart time frames, weekly, what the daily looks like. It's already here. It's reversed. Lots of things to learn.